Hey, what's going on, everybody? I just wanted to circle back to the video I did earlier today, April the 14th, 2025. I wanted to show you all, which I didn't in that first video, what a gap fill looks like. And there was a good example on the SPY stock chart. As y'all know, I'm not a financial advisor. This channel is for awareness and education purposes only. So, I'm already in the SPY chart. This is Friday. This was Monday, today. And if I click on it, you'll see that vertical line, top left corner, it says April 11, 2025, Friday, FRI. It shows you right beside that, it says open and close, top left corner. And then across from that, horizontally, it says high and low. So it's showing you the open. So the open of a green candle starts at the bottom. $523.01. The close of the green candle, $539.12, is at the top of the body, the block. And then you have your high and low, which is the tail or the wick, or some call it the shadow, the little line on the bottom of the candle and the top of the candle. So Friday, it closed at 533.94. For the red candle, which is Monday, the open is at the top of the red candle, which is contrary to the green candle. The open is at the top of the red candle, and the close is at the bottom of the red candle. And then you have then you can have, in this case, a tail, a shadow, or a wick on the bottom or top, or both, or both of the candle. So this is Monday. And as you can see, the open, the close, the high, and the low. So it opened at 544, which is a gap up from the close at the end of Friday at 4 p.m., which is 533. So there's your gap. I'm going to zoom in just a little bit. I don't think it's going to let me zoom in more. So the open, the close for that candle Friday, the open, the close for that candle today. But as you can see, the wick, the tail, the shadow, whichever you prefer to call it, came all the way down here. That little skinny line came all the way down here. And look how it lines up with the top, which is the close of the green candle. Almost exact. So if we go to price, close of Friday, $533.94. And then the low of Monday, today, it actually came down and filled the empty space. $533.86. So if it came down in price, the candle came all the way down to the top of the green candle Friday, the close. Oh, 2-minute lines. That's not gonna work. I'll just draw it myself. And then once it came down, the reason there's a tail or a wick, because that means price went back up after it hit that low. So I went back up. And created that box for today, because this isn't one day, this is a daily. These are daily candles. So that's the strategy some people use, which is called a gap fill. And then you also have the opposite, which is called a gap and go, where it gaps up. As you can see, one day it opened up at 544.05, and it could keep going up to 546, 547, 560, or whatever. You do have some instances like that. But oftentimes it fills that gap before it goes back up. And that's what it did today on SPY. So not that big of a gap fill, but it's a perfect example of how that box is the body. The little tails there and there, that's your wick or your shadow. That's your high and low points. But when you have price from the next day, after it gapped up overnight and early in the morning before 9:30 a.m., if you have price come down back to the close of the previous day, or whatever point where it gapped up from, doesn't necessarily have to be a day. I'm just using a day for this example. $533.94 Friday close. And Monday, the price it came back down to 533.86. So once it hit that price, it can go lower and keep going lower. And if it's bad news or whatever reason, whatever catalyst that could cause it to do that. But what you watch for is you can play the gap fill to the downside, and once you see it reach the close, like if you have like those lines set up like I do, like a lot of those lines, support and resistance lines that you can draw on the chart. If you set a line here, like doing, once you do your homework and your research, it could be Friday at 8, it can be Monday at 8 a.m. before the market open at 9:30. But once you set that line, you know where it can go if it, tends to fill the gap, which it did today. And once it filled that gap, you know where to get out at. Or once that run is over. Because chances are it's going to bounce. And if it don't bounce, you can get back in or keep making money if you don't get out right away. But in this case, it bounced. And that empty space is basically filled because of that tail. I'm going to give you a different view. Let's do 15 minutes. So you have Friday here before close. You have until Friday night, 8 p.m. And then you have here this next dark bluish grayish looking box. That's 4 p.m. Let me make sure. That's 8 o'clock to 4 a.m., not 4 p.m. I'm sorry. So Friday close here, 4:15, top left corner. You can see the time and the date at the top left corner. Come over, as you can see, it jumped up right here at 8 o'clock on 4:13. Kept coming up 4 a.m. And then even came up here at 9:30. Kind of got a green candle, that first candle at 9:30, first 15 minutes, that made it seem like it wanted to gap and go and keep going up, but it was just a little fake out to actually be a gap fill. And if you follow the horizontal line that I'm holding at the bottom of this wick, this 12-15 candle here, the crosshair, it matches up the bottom of that red wick over here to market close on Friday. So it filled that gap and boom, bounced. Came down a little bit, but then bounced. And came all the way back up. To here, from here. So it filled the gap from Friday. Was a little choppy right here, but eventually bounced pretty good all the way back up to here. So that's basically what your gap fill look like on a 15-minute time frame. Each candle represents 15 minutes. But you have price where it did that, jumped up slowly, got here, higher, played around, higher, right here, just to make you think it might have been a gap and go in the first 15 minutes. But then you got that nice red sell off there, bounce back, come back down, just choppy. And then eventually you got the biggest move of the day pretty much with that gap fill. And then you got the second biggest move, or just as big of a move, with it going back up. Not quite as high, but it went back up. And that's what we call a gap fill strategy. But you have to wait. Once it get to that price, you have to look for it to like bounce off of it and come back up. And you can also have a gap fill vice versa, where if it gap down, it'll gap back up, fill the empty space before it goes back down more. So it can work vice versa.